Good evening, Strategic Alpha community members. Hope everyone is able to hear me. If you are able to hear me, please comment in the comment box. We'll start with the weekly community connect. So, today is 8th of August 2025, and we are up for yet another weekly community connect where we discuss about knowledge, wisdom, and ideas. So, hello everyone. I'm Suyog Dhavan, founder of Strategic Alpha and the Conviction Club, and I'll be taking you ahead through the weekly community connect. So, hope everyone is able to see the screen. Every Friday at 9 p.m., we do this weekly community connect and let us go forward. So, this is 8th of August 2025. Let us first discuss about the frontline indices. So, India VIX closed at 12.03, 0.5% up. Nifty 50 was down 0.8%. Nifty Midcap 100 was down 1.12%. Small cap index was down 1.36%. And public sector enterprises was down 0.9%. BSE IPO index was down. BSU PSU Bank index was up 1.6%. Nifty Media index was up 1.1%. Nifty Metal was up 0.5%. Nifty Auto was up 0.3%. And Nifty Commodities was up 0.2% in past 1 week. So these are some of the sectors which have shown relative strength against the markets. Now let us look at the commodities performance. So silver has was up 3.3% in past 1 week. Iron ore was up 2.2%. Gold was up 0.7%. Ethanol prices were up 2%. Now let us look at other industrial commodities. Zinc was up 3.5%. Tin was up 3%. Lead was up 1.9%. Aluminum was up 1.76%. Coffee prices were up 7%. So now let us look at the news which matters the most. So Trump has raised tariffs on Indian imports to 50%. So that was one of the negative development which has happened in past 1 week. So India pauses P8L deal as US imposes tariffs on Russian oil imports. Trump order allows crypto real estate in 401k investment plan. So 401k investment plan is a retirement plan, just like Indian SIPs, the way people plan retirement through SIPs. The way similarly, there is a instrument in US which helps people plan their retirement. So it is 401k investment plan. So Trump has allowed crypto and real estate in 401k plan. So which is a big development for crypto, because I've been talking about it that Bitcoin cannot die now. Now, in fact, most of the asset managers around the world are preferring Bitcoin. They are launching Bitcoin, so it cannot die. So it has came to a place where it will have a very important place going ahead in the future. So now let us look at Strategic Alpha's FTVT framework. So the sectors which are in uptrend, high relative strength and low valuations are the same which we discussed last time. So I'll not be talking much on that. Now let us look at what are the stocks which I am currently studying. So I'm currently studying KRBL, that is on my radar. I'm studying that. Now let us move forward with the important update of this week is once again I've been talking about this ratio chart, small cap versus Nifty. So in fact, from quite some time I have been talking that small cap as an asset class itself is not favorable, and I've been holding that view from very long time. And why I'm having that view is the reason that this chart. So this is Nifty small cap divided by Nifty ratio chart. So what happens is in every bull cycle, Nifty small cap generates a lot of extra returns, which is called as alpha over and above Nifty, but it loses all that alpha during the bad cycle, bear cycle. So small cap bull cycle and bear cycle creates alpha or loses the alpha over and above Nifty returns. So if you have seen 2004 to 2008, small caps created a huge alpha compared to Nifty. but it lost that all alpha in 2008, where it heavily underperformed the Nifty, and it lost all that alpha generated. Once again, before 2014, 2013 to 14, small caps were relatively at a ratio of 0.5, 0.45 or 0.5. That is the time where that is the best time to invest into the small caps. And once again ratio touched that line, and from then from 2014 to 2018, small caps small cap generated humongous alpha against Nifty. But again, once in a bear market cycle in small caps from 2018 to 2020, it lost all the excess alpha generated. So this is the 2 3 year cycle where the small caps heavily underperformed the Nifty, and small cap struggled. Once again, the ratio became favorable at 0.5 times in 2020, where it touched 0.5 times once again, and it created alpha until 2022 again. But in a small bear run from 2022 to mid of March 2023, small caps once again heavily underperformed. But March 2023 was the time when one should have gone heavily into small caps. And small caps once again from March 2023 to September 2024 created a humongous alpha over and above index. And I've been talking about it from from September itself, that small cap as an asset class itself is not favorable, because ratio is not favorable if for the further investment or for fresh investment. In fact, I told that this is the perfect time to cut down the small cap, that I said in September. And once again recently, after when it started going up, when this ratio started going up, I said that small cap में थोड़ा बहुत बढ़ा सकते हैं, but not as a whole, because small cap is still not the best asset class. But once again, what has happened is it has got rejected. This ratio has got rejected, and if you can see now, the ratio is below this green line, which says that small caps will struggle once again. So I've been saying that the best time to own a lot of small caps is when the ratio touches 0.45 to 0.5 times. So are we going to see that phase ahead? As of now, it is very clear that small caps as an asset class is not favorable. So only when the ratio touches here, that is the time to go gung ho on small caps. So time is yet away, and we might see that maybe in 6 months or time. But I don't know when it will happen, whether it will be 6 months or 1 year or maybe 3 months or 12 months. But it is for sure that whenever the ratio touches 0.45 to zero point 0.5, that is the best time to own a lot of small caps. Today, small caps are not favorable. And then what is favorable? So I've been talking about it in the last weekly session also. I talked about it that Hang Seng as a asset class, Hang Seng as a index is much favorable than Nifty, than market. And Hang Seng index itself gave the valuation comfort. And even today, if you look at the ratio chart, from 2020 to 2024, it created a lower top, lower high, lower low structure. But since September last year, it is creating higher high and higher low structure. So Hang Seng as an index, Chinese equities as an index, and especially I'm talking about the tech index, not just Hang Seng index. It is relatively better than Indian markets, because Indian markets valuations are not much favorable. Small caps are the worst because the valuations are much expensive there than the broader than the Nifty. But Hang Seng as an index is has having low starting valuations and high relative strength. So that is what even today it is favorable. Now, once again, I've been talking about it, and let me just do a give a update on this latest update, that silver in USD versus small caps in USD. Silver in dollar terms versus small caps in dollar terms, and if you look at the charts here, silver has once again started its outperformance against the small caps. In fact, from the last year itself, from the April itself, that is when I discussed about silver. I did a detailed video on that, and that was the best time to own the silver. In fact, on 7th of April, when I posted this tweet, that silver is trading at a very nice support, and since then it has been outperforming the Indian small caps. So even today, if you see the I have said here that history not only repeats but rhymes, deja vu ahead. And why I have said so, this chart doesn't give you the full clarity. Along with it, if you go through my silver super session, it will help you understand why silver is a asset class which is better than small caps. And we are at a similar stage where we were in 2018 and 19, where silver heavily outperformed small caps. And are we going to see a deja vu once again, the repetition of that pattern once again? Fundamentally, technically, from a valuation standpoint, all those things make sense for silver at this point of time. I talked about it earlier also. Once again, let me just reiterate that silver to gold ratio in April to May 2025, it was at a 40-year rarity. And it was once in a 40-50 year kind of a opportunity, wherein uh, it created that opportunity of ratio being at rarity. And whenever the ratio has went into such rarity, after that in next 2 to 3 years, silver has heavily outperformed the gold. Even today it is at the same place. So if you see, in 1991 the silver to gold ratio touched these levels. In March 2020, once again it touched those levels, and recently in April to May 2025 it touched those levels. So silver was at rarity, and even at this point of time, it looks better than gold. Uh, and even if I look at from the mean reversion point of view, this is the mean reversion level. And for it to touch that mean reversion level, it means that there is a long and huge outperformance which can happen from silver going ahead. So the long outperformance is yet pending. One more thing, in last past gold miners were up 15% in just past 1 week. We did a special video on gold mining fund just 2 years back, and since then, the gold mining fund itself has 120% returns in just 2 years. When the markets are struggling, DSP World Gold Fund, that is the session which we took, it is up more than 120%. But a lot of people were asking whether is it the good time to book profit in gold miners. But if we look it from the overall chartical perspective and overall relative performance perspective, it is quite clear that the outperformance has just started for gold miners. This is a ratio chart of gold miners versus Nifty in dollar terms. And if you look at this the chart in the last week itself has given a cup and handle breakout. So this cup and handle breakout this cup and handle breakout is suggesting that there is a big outperformance which is pending from gold miners against the Nifty 500, and the outperformance has just begun. However, I would like to reiterate that there is no margin of safety in the gold miners at this point of time. We discussed this case 2 years back, and this is a case where miners can keep on doing well. So there shouldn't be any hurry there. And in the last week itself, we had discussed this that gold has restarted its outperformance against Nifty 500. So gold can do well going ahead. Now, the question comes that what is the time when you can go very heavy on equities? I've been saying it from September that you have to be underweight on equities and you should not ignore precious metals in your overall portfolio. And that has played out well. But going forward, what is that time where you can completely come out of the precious metals and be in equities? So means or have more of equities and less of precious metals. In September itself, I said last year that it is the time to own more of precious metals and very less of equities, where you can own high conviction stocks or at least have a large allocation in gold and silver. That has played out well. But now the time, so people were asking in the community that what is the time where we will be saying that equities are heavily comfortable? So this ratio chart tells us about that comfort level when you want to switch between the equities and gold or equities and precious metals. So this ratio, whenever it touches this green line, this is the time where you should own more of equities and less of precious metals. And the red zone is the time where you should own more of precious metals and less of equities. Now, this since September itself, that ratio has played out well. Gold has outperformed, gold and silver has outperformed the markets, equities. Now, the time will soon, maybe I don't know how soon. It might take 3 months, 4 months, or 6 months. But whenever this ratio touches this green line, that is the time it tells you that you can own more of equities heavy, and you can go heavy on equities, because this ratio has helped the investors to play out between the asset allocations, uh, uh, and to safeguard their portfolio. Because when you mix precious metals with the equities, you not only protect the downside, but you get better risk adjusted returns. So that time might be coming maybe in 6 months, 8 months, 9 months, I don't know when. But whenever it touches this green line, that will be the time to go very heavy on equities. As of now, I've been saying that equities is not the best asset class. You have to be invested in equities, but you cannot ignore precious metals. That is what I am saying. So this was all about the weekly roundup and weekly community presentation which I wanted to give. So with this, if you have not followed me on social media handles for the dose of knowledge, wisdom, and ideas, do follow me on Twitter, where I on a live basis I post about the ideas, the knowledge sharing, and each and everything, whatever my readings are. I post that on Twitter. And soon I'll be starting techno value investing workshops. So do register whenever I'll be posting about it. I'll be posting it on VIP access. Do register for that workshop. So at last, one more important thing which I want to share is do not ignore the role of asset allocation in your portfolio. A lot of people say when some of the asset class performs, they think that I should have put all my money in this asset class. But that is not how you make better returns. The best of the best returns happens when you are in the right asset at the right time. And the role of security selection or the market timing is just 2% or maybe maximum 4 5%. But if you go through the determinants of the portfolio return, you'll understand that 90% of the times you make returns when you place your asset allocation right. And when I'm saying asset allocation right, it is not just gold or equity or it is not just two asset classes. It can be the sectorial allocation. It can be the equity being there. So let us say small cap as an asset class is one asset class. So mid cap is one, large cap is one. So to uh, to understand when to own large caps, when to own small caps, when to own gold, when to own silver, and being at the right time and having following the right asset allocation makes much more money, makes much more risk adjusted returns than just security selection. In past 1 year, it has been very stock specific market, if you have seen. And be even after being stock specific, even if you are a hero in this market, in terms of finding the best of the best picks, but overall return from the portfolio has not generated much, because if you have not owned gold and silver in past 1 year, your portfolio has underperformed. So that is the role of asset allocation, and it is much more important, more than the security selection and stock selection. So with this, I conclude the weekly inner circle session, weekly community meet. And with this, I open up the questions. If you have any questions, please raise your hand. I'll be taking 5 questions.